To Roth or not to Roth? That's today's question. A Roth 401k is an employer-sponsored retirement account that is funded with using after-tax dollars. To withdraw from this account, you must be at least 59 and a half years old and had the account for at least 5 years. Reasons to start using your Roth 401k as opposed to a traditional 401k. Okay, Roth are for your early years or your years of which you are not making a lot of money and you are in the 12 to 22% bracket, tax bracket. So if you are working and you are a younger person, probably you're within the 12 to 22% tax bracket, Roth 401k or Roth IRA is a better bet for you, because later on in life you most likely will be at a higher tax bracket, and that higher tax bracket means that you will be paying more taxes later on if you were to contribute to a traditional 401k. So contributing to a Roth 401k now locks you into that 12% or 22% tax bracket, depending on what your income level is. And I'm going to show you what the tax brackets are. But this means that you can almost hedge your money, your retirement, and then you're paying taxes now, and you'll never pay taxes on that money again. All right, so let's go to Google and let's type in tax brackets. Here we go, tax brackets, 2025, sure. We'll go to the irs.gov and we will pull this up. So this is 2024 tax rates for a single taxpayer. Okay, and let's say you are single and you are making less than $47,000, 150. Then you would be at close to the lowest tax rate, the 12% bracket. So between 47,151 and 100,525, you would be in the second tax bracket. Well, the 22% tax bracket then. So that means later on in life, let's say you are making, you have increased your salary to, let's say, $200,000, okay? And when you have contributed all that money into your Roth 401k early on, you would be taxed at those lower tax brackets. And later on in life is when you would probably switch from contributing to a Roth to a traditional 401k, because now you want to optimize your tax and reduce your tax. So I would say once you hit, I would say that's higher than this 22% tax bracket, that's when I would start thinking about changing. So above $100,000, you may, as a single filer, you may want to think about changing your Roth to a traditional 401k at that point, because it makes more sense to kind of start hiding the cash from the government. It's not truly hiding, but it's working within the rules of the government, but it benefits you. Now, if you're married, there is a different bracket for you. So here is married filing jointly, and then we have 10%. So if you're making 23,200 or less, you actually pay 10%. If you're making between 23,201 and 94,300 as a married couple, then you're in the 12% bracket. So this is where I would stick, and I would try to stay within, because you're only paying 12% as opposed to 22%. So this is quite a reduction in your taxes. So if you're working, let's say 10 years, and at 10 years you're making less than $100,000, you're making $94,000, and you're married, as a couple, I would both contribute to Roths. The only bad thing about contributing to your Roth is it does tax you immediately, and it makes it a little harder for you to, go through life. You're not making as much money, but this is definitely a good benefit for you and your family. This will provide you with a lot of tax-free income and growth. So let's say you put that money into your 401k, your Roth 401k early on, and you put it into a total stock market fund, BTI or VOO, the S&P 500, it grows tax-free for the rest of your life. So at 59 and a half, or whenever you are allowed to start pulling out that money, it is tax-free, and that is a great benefit. So even if you are making $300,000, that money that was put into the Roth early on is still tax-free and already been taxed. Reasons for contributing to a traditional 401k are, say you are making, let's say that you are making $201,000 as a family, and you want to start reducing your amount of taxes that you're paying on your money right now. And let's say that in retirement you are going to have zero income after that, so you will be in a different tax bracket at that time. So today, if you're making $201,000 and 051, if you're making that, you're going to be put into the 24% tax bracket. Once you're in the 24% tax bracket, you are now paying a lot of additional taxes on your money, and it would probably be a smart idea to start putting money into your traditional 401k at that point, because at that point you can you then skip the taxes, and what would happen later on is you would go into a lower tax bracket upon retirement, and when you are in retirement you will be making pretty much zero income there. At that time, that's the best time to do your Roth conversions. Let's say you are early retired at 50 years old, and you have you have $100,000 in your traditional 401k. You take some of that money and you move that to Roth, and once you do that, you're taxed on it at that point. But at that point, you were retired and you're not making any income, and that Roth money is taxed at the level of which, let's say you moved $24,000, and that would be basically taxed at the lowest tax bracket at 10%, and just a little bit is taxed at 12%, but that greatly reduces your amount of taxes later on. One important thing I'd like to share about the tax brackets are they are not like cliffs. So once you hit a certain level, then automatically you're paying that 22% through that entire band. Let me read what this says right here. So this says, you pay taxes as a percentage of your income in layers called tax brackets. Okay? As your income goes up, the tax rate on your next layer of income is higher. Okay? When your income jumps to a higher tax bracket, you don't pay the higher rate on your entire income. You pay the higher rate only on the part that's in the new tax bracket. Okay? So let me explain this. So at this point, let's say you got, you're single, and you have $47,151 this year. Okay? This is your total taxable amount. So $1 of that will be taxed at 22%. Okay, the rest of it will be taxed at the 12% bracket. Hopefully this explains your Roth 401k versus your traditional 401k questions, and points you in the right direction. So thank you.